Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the Friday edition of 7 Investing Now. My name, of course, is Daniel Brooks Klein. I'm being joined, as you can see on the screen, by Matt Cochrane and Simon Erickson. Gentlemen, we are going to hit the ground running today. We have too much show for how much time we have. So there is not going to be any dillying or dallying. We will dilly and dally next week when there aren't as many earnings coming out. But we're going to talk EA and Activision earnings. Then we're going to talk Intel, AMD, and the fight for AI. We are, of course, also going to take your questions and comments. We would love to hear from you. So anywhere you're watching this, in theory, if you share in the chat, and I say in theory just because sometimes it doesn't work on some platforms, but for the most part, any place you share a comment, we will try to get it. But let's start with Activision Blizzard. And we're going to talk a little bit about something they talked a lot in their earnings call about the dark clouds hanging over the company. What does that mean? Earlier this quarter, a lawsuit was filed against Activision Blizzard by the California Department of Fair Employment and Housing that alleges discrimination and sexual harassment against women at the company. Matt, what was the fallout of that? And sort of give us the 10,000 square foot overview of what the company has done.
Yeah, so last month they were hit with a lawsuit, and it alleged a lot of like discrimination and sexual harassment against women at the company. The Blizzard president, not the Activision Blizzard CEO, but just the president of the Blizzard division, was mentioned in the lawsuit, which said like he was aware that employees were leaving because of sexual harassment as early as 2019. And the lawsuit said, like, Activision Blizzard had a frat boy culture. That's a quote from the lawsuit, and was a breeding ground for harassment and discrimination against women. It should be noted, women make up about 20% of Activision Blizzard's workforce, but the lawsuit said very few had reached top roles within the company. So in response, thousands of employees staged a walkout after the lawsuit was filed and after management's first response to it. And then just days before the quarterly earnings were announced this week, the president of Blizzard, Brack, stepped down, and executive vice presidents Mike Ibarra and Jen O'Neill were named co-leaders of the Blizzard division.
So, Matt, there are clearly some cultural issues here, but is this going to negatively affect the company, or is this really just something internal that they have to handle?
Well, it's both, right? I don't think I don't think it directly affects the company where you're going to see it in next quarter's earnings numbers or anything like that. I don't think people will stop buying or playing Activision's games because of it. However, I do think it's going to hurt them when they try to recruit talent. I mean, there's only so many game developers and coders out there that are top level. And when there's a lot of competition for that talent, this obviously hurts Activision's prestige and role in recruiting that type of talent. So I do think it hurts them. And if they don't make big changes, long term, you're definitely going to see it affect the top and bottom lines.
Simon, I'll let you weigh in here because there are a lot of companies in the tech space that do not have great reputations as places to work. There are a lot of companies in the gaming space that have this same reputation as not being great for women. Is the fact that this has become public and they're addressing it actually kind of a positive in terms of I joke about this, but I opened a Wells Fargo bank account right after their scandal because that seemed to me the time they're least likely to do something wrong. Am I wrong in reading it that way? It actually feels to me like this being public is actually going to be a good thing for them.
It's obviously something that's not okay, and it is good that they're acknowledging it, Dan. This is something that's been rampant for a lot of game makers. You're on tight deadlines. You've got a kind of a culture that's made up of workaholics a lot of the times. It's a lot of different companies have claimed similar things to what Activision is going through. I completely agree with what Matt said, that the real impact for investors in this story is going to be, can you hold on to those key developers that are out there? We've already seen Activision struggle with that in the past, right? Their next big game was supposed to be one called Destiny a few years ago, co-developed between Activision and their developers. Bungie was the team that was on, and they just couldn't get along. They had a cultural mismatch, and Bungie ended up taking all the rights to Destiny with it, and that hurt Activision. And of course, you have to address things like this. There's talent that makes an important part of this entire industry that you want to make sure you're retaining those.
Talent is unbelievably important. We don't think of video games this way. We're going to talk about Hollywood and sort of the relationship of Hollywood to video games, and they don't work exactly the same way, but the creative process is pretty similar, like in terms of developing storyline and luring the best people. But let's take a little bit of a look at the numbers here. Second quarter 2021 non-GAAP earnings were $1.20 per share. That's up 48.1%. Consolidated revenues increased 18.8% year over year to $2.29 billion. There are some adjustments there that would take it down to about 7.5% per year. So it really depends how you look at those numbers. And overall monthly active users were down. Monthly active users were 408 million compared with 428 million as of June 30th, 2020. So Matt, that is a small drop. And let's remember, where were we a year ago during this quarter? We were in the worst of lockdowns. We were in the summer where I just let my son play as many video games as he wanted. Does this number bother you, or do you just take it as sort of cyclical based on where we are as a society right now?
No, I don't. It doesn't really bother me. I mean, there's last year everyone was home. Everyone was playing. Well, I mean, a lot of people were playing video games. We had a lot of people were working from home, or they couldn't go to work, and so they were stuck at home. And video games was a huge beneficiary of that. So yeah, I expect these numbers, especially the monthly active users, to be down a little bit. They're not down too much, and on a 2-year basis, I think they're still up pretty good. So I'm not worried at all about that.
Yeah, when you're talking 408 million versus 428, that's relatively rounding errors here. And again, there's just some people that are working this summer or doing things that are not conducive to playing video games. So that number doesn't bother me at all. We would love your questions and comments. We see a couple of them coming in. We'll get to them either in line with the topic or in between talking about companies. So feel free to ask away. So let's talk about distribution here, because I think that speaks to sort of the changing nature of this industry in general. Activision Blizzard reported online revenues of $2.2 billion. That's up 27.3% year over year. Retail channel sales were down 18.5%, and other revenue, which I'm not sure what's included in that, decreased 23.1%. So here's my logical thought here. Digital is growing because there's no need to buy physical games. Matt, speak to this, and then Simon can weigh in. My son buys games, he downloads them on our Xbox. Like we use GameStop the same way I use Barnes and Noble. Is I go into Barnes & Noble, I look at books, and then I buy them at home, and I feel guilty, so I buy a coffee, but GameStop doesn't sell coffee. So it seems to me this industry is moving digital. So those changes just show that this company is tracking like you'd expect it to track.
Yeah, no, this is a well-known trend in the industry. It's been going on for several years now, and it's been helping not just Activision, but EA's and Take-Two's margins go up, because instead of printing out games on disc and putting them in stores and the packaging and all that stuff, you just download games, and that's just a trend that's been continuing for quite some time. And is it ever going to get to 100% digital and 0% physical games? Probably eventually, but it's a slow trend that's really helping these companies' margins.
I don't think it'll get to 100%. And Simon, you can weigh in here, because I think there's always going to be that LP factor where they might put in special artwork, or maybe you buy the latest Star Wars game and it comes with an R2-D2 or whatever. I think there's always going to be some incentive for the physical. The thing that's actually surprised me is that Activision Blizzard, not alone, but they're choosing to go through marketplaces. They go through Xbox, they go through Switch, they go through Steam, whatever it is, and they don't go on their own. Because obviously, if you went on your own, you could cut the margin. But of course, Microsoft's not going to want that. Sorry, Simon, kind of a broad non-question there, but feel free to take it where you'd like to.
It's great, Dan, and I hope I'm not jumping the gun on a future question you want to ask us here, but you said something about how video games are different than the rest of the entertainment industry. I think that's important to remember. In addition to what Matt said about how we are now digitally downloading the games rather than buying them from GameStop, which is very true, video game makers are also much more and more reliant on the in-game purchases as a way to kind of smooth out revenues. So rather than just selling the game up front and then disappearing, they say we want to get a larger and larger take from each one of our players over time. And that's directly related to how often you're playing the game, right? You might have a Netflix or a Disney Plus subscription at home that you pay every month, whether or not you're watching movies every day. But with video games, with these in-game purchases that you're making, you actually have to be playing and engaged with the game to be racking up the bill for that. And so I think this is kind of one of those where you have to have a relevant game that is popular, that's at top of the charts, that people are playing all the time, if you want those revenue streams to continue. I know we're going to be talking about EA in a little bit here. I know that more than 50% of EA's revenue now is from those in-game transactions. I believe that Activision and even Take-Two are pretty similar. They're the majority of revenue contributors now as well. But that's more and more important, Dan. I mean, you have to stay popular because that's where these companies are making their money.
Yeah, so let's talk about this a little bit. I'd like to hear from both of you because I think you're both a little more enmeshed in this culture than I am, which is zero for me other than being a parent. But there's a balance here, right? Where those in-game purchases have to be more things like skins and cosmetic or songs or whatever it is, and not so much game enhancers. Because if there's pushback, right? If I can go into, say, Call of Duty and I have money, I'm not 17 years old. I can go in and spend $100 and all of a sudden I have a tank. And even though I'm bad at the game, I'm dominating. They really have to balance that, right? Like that's not something Disney has to think about.
Yeah, it's becoming more and more competitive. I mean, like when you look at this, we're not just playing Mario Brothers and Mario Kart at home by ourselves anymore. Even though a lot of people are still enjoying it that way. I mean, esports and the competitive nature of so many of these games, these team-based games, is pushing it where when you're more and more competitive, you want to do whatever you can to win, right? Not just skins and the things that, look pretty on the characters that people are paying up for, but weapon upgrades, additional levels, things that will make your character or your team more competitive is more and more important. And Dan, now we're seeing League of Legends attracting 50 million people for their finals. Several other games are getting 30, 40 million people tuning in across the internet. Gaming is a lot more than just the game sales itself. It's creating advertising revenue, promotions, merchandising, things like this. This is similar to like the NBA Finals or the NFL Super Bowl. I mean, these are ecosystems that are developing, and more, you got to start paying attention to that as a revenue contributor as well.
NBA Finals, yes. Super Bowl, not quite there. The global numbers on the Super Bowl are astounding, but I do understand the point. And yeah, there's a whole counterculture of this, or maybe it's the actual culture, and I'm the counterculture of people on YouTube and Twitch live streaming gameplay and putting up tips and tricks. If my son is frustrated when I see him playing a game, I'll tell him, just like Google that, and like you'll find someone who shows you how to get through that section. That's all new to me. And we saw with Activision Blizzard here, they post games in PC, they post games in console, they also posted games in mobile. Matt, I know Call of Duty Mobile was a massive launch for them. Do you think these traditional gaming companies going into the mobile platform, because for me, I don't feel like I want to play Call of Duty on my phone, but I also don't play it on a console, so that's probably not fair. Do you think there is a sort of massive opportunity? Because everybody has a phone. Everyone doesn't necessarily have an Xbox.
Yeah, no, definitely. Like a Call of Duty is a massive franchise for Activision Blizzard. Like they're, when it comes to Activision Blizzard, they have really three franchises that like really, really matter to its top and bottom lines. And Call of Duty is right up there. And Call of Duty, I think, is the most popular video game across like the younger demographics for video game players. And its mobile game this year is on pace now to do $1 billion in revenue, which is just huge for the company. These are streams of revenue that these companies like Activision or Take-Two or EA did not have just a few years ago. So these are like new opportunities for them to grow like very popular franchises. And as of yet, I don't think you can play like mobile to like with a console player, but you can play mobile to mobile, and people can do that like on their lunch breaks or at work, or like, you just have your phone with you everywhere you go. So while you're waiting in line at the DMV or whatever you're doing, you always have that available, and people are playing because they love these games.
So I'm going to tee up a comment, the second one from Andrew Conley, to sort of lead into the end part of our discussion on Activision here. So JT, if you want to bring that one up, it would be great. The video game industry collectively is larger than the music and movie industries combined. That is actually true. Not that I would question that it wouldn't be, but that is true. And here's why I ask that. Simon, this is kind of a franchise business, right? Like, this isn't some new game mobile, it's Call of Duty mobile. And Call of Duty, like Star Wars or The Simpsons or whatever, has a built-in audience. So Activision, when they do that, or Nintendo, when they take Mario Kart and put it on your phone, they're basically taking a known property and bringing it to a new platform. That gives it a better chance to succeed, right?
I think so. I draw the parallels with, how many Marvel-based movies have been made in the last 10 years that are sequels of the same characters that everyone's familiar with. It's kind of like the same franchises that Activision has. I think they're getting a little long in the tooth, Dan, in my own personal opinion. I mean, the Warcraft franchise is 30 years old. The Call of Duty franchise is 20 years old. And I don't know exactly when Candy Crush was first developed, but I know that, the King Digital acquisition was, what was it? 5 or 6 years ago now too. And Activision is still referencing these as the drivers of results. My concern is Activision truly being innovative enough to stay in front of where the video game industry is heading? They missed the boat on Fortnite. They fell behind. They did have Overwatch, which was very successful for them, but they were certainly not the most popular in that game. And, we saw Destiny kind of falling apart. And now you've got Facebook putting 10,000 engineers onto their VR platform. And I think that Activision, as one of the world's largest developers and publishers of video games, I respect that this is a franchise business, that you want to keep churning out sequels to the ones that people are familiar with. But on the other hand, there's only so many of those users who are going to stick around for 10 or 20 years and keep playing those games. I think we have to see some new franchise put a foot in the ground that players really want to get involved with.
Let me ask a quick follow-up here, and then we'll let Matt take Max Lucas's question as we move off of Activision, because we still have a lot. We still have EA, we still have AMD and Intel to talk about. But Simon, is this a bit like Disney, where it's okay if like 10 of their 12 movies are sequels and franchises, as long as they take a couple of shots? Because if you're Activision, if you have a new franchise every 5 years, and that franchise could give you, 30 years of revenue across platforms that haven't even been invented yet, it seems to me as long as you're taking really smart shots, you're probably going to be okay. But I don't know this industry all that well, so maybe I'm wrong.
I would prefer acquisitions. I would prefer going out and buying up a team that's got a really hot property that Activision thinks that it can monetize and create those franchises out of, right? I mean, it's different than Disney, Dan. I think that there's a Pac-Man world out there. Maybe there's a StarCraft world too, but it's not as big as Disney World is, right? And it's not going to sell as much merchandise and have a direct streaming service directly to your home for all these things that's as popular. I mean, you've got an entertainment juggernaut that's just been around for more than a century, that's been incredibly successful. Activision's margins right now are reliant on those players that are playing games that don't require a whole lot of new development. They put some tweaks on here and there. They create a sequel here and there. They say, okay, we're going to sell it more, and we're going to keep our 40% operating margins. Is that sustainable 5 or 10 years from now? I am questioning whether it is as an investor.
I think it's a nice basis, but you're right. It's innovate or die, because there's going to be diminishing returns. And we've seen it with Star Wars. Sometimes for a franchise to grow, it has to go away. And none of these ever go away. You might see like a gap in periods where they don't make a new game, and that builds up some excitement, but it's not the same as, Disney, when are they going to make a Mutants movie, with the X-Men, or when is Daredevil coming back? That's real excitement. That's difficult to do here. Matt, we're going to take Max Lucas's comment. JT's having some technical issues over at the house. So, nope, he was able to put it up. So Matt, if you want to read that, that would be great. And then you can answer it, and then we will move on.
Well, yeah, I actually think this is a great response to like Simon's point, because I think I disagree with Simon here. But Max says, will we start to see more game franchises create liquid games that don't have new versions that come out, but are just updated real time? Grand Theft Auto 5 has kind of started to do this. And to his point, so Grand Theft Auto 5 came out in 2013. And in 2020, Take-Two sold 20 million units of Grand Theft Auto 5, which was the most since the year it was released. And like all they've done is like just keep updating this world. Players want to be immersed in a world. Like the metaverse is the hot topic, but in a kind of a way, these video game companies have created like mini metaverses of like what we might see in the future, like within some of these gaming worlds. And like you've seen it with Grand Theft Auto 5, you've seen that we're about to talk about EA, and we can talk about Apex Legends or Call of Duty with all the different releases of Call of Duty. And when Call of Duty makes a release from like World War II or modern day warfare, that's almost there's a lot of different things in there. It's still battlefield strategy and things like that these players get immersed in, but it's like it takes a lot of work and research that goes into it. And I think the players appreciate those new versions more so than they would like almost any other game. And so if you're one of these companies and you have a choice to like devote a lot of developers into what will be a sure new Call of Duty like whatever Spanish Armada version, right? So everybody plays that, and then or a new game that nobody's familiar with or that franchise. Like if I'm not a shareholder of Activision, I am of EA, but as a shareholder, I want to see, put it into these known franchises where there's a dedicated player base, like that loves these games. And it's not just the older players. Like Call of Duty is popular with teenagers. In fact, I think it's the most popular game with teenagers. So there's obviously new players coming on board with it, and you start to create these network effects. So like my son was talking about the other night, he likes he plays Rainbow Six, which is a game made by Ubisoft, and he likes that better than the game he was playing because you don't have to wait long to get into a new game, and because the game he wasn't playing wasn't as popular, and you have to wait like 15-20 minutes before a new game happens. But there's so many players on Rainbow Six that there's basically a new game every time you want to. And that's the same with Fortnite or Call of Duty or any of these really large games. Like, so you have a network effect. The more your friends play it, the more you're going to want to play it. You want to play with your video game is so social right now. And I think it's not like when I was a kid and I'm stuck at home and I'm playing Super Mario Brothers by myself or with my brother, and it's just like the two of us, it's not like this is how boys and girls socialize now. And I think that's a very important aspect. So the more players a game has, the more social it is. And I really think you're just starting to see, like Max said, is like these liquid worlds that are just constantly updating. And it's not like you see that with all kinds of software too, like Microsoft Windows. Now they just roll out updates constantly instead of like selling like a whole new version. I just think that's where we're going, where games are just constantly updating and iterating. And as a shareholder, I like that. I want them to devote their resources to like known IP that people love.
Few people know this, but Matt spent 2 weeks in the hospital in 1983 with a severe case of Pac-Man fever. It was driving him wild. Simon, because Matt disagreed with you here, let me give you 30 seconds, a minute to rebut, and then we can move on to talking about Electronic Arts.
Yeah, we promised a spirited debate, and now Matt and I are going to, fight it out on Call of Duty Black Ops to see who is the ultimate winner in this discussion. Just kidding, of course. I think that actually the same dynamic you mentioned, Matt, actually plays in EA's favor. It might work against Activision Blizzard, but that same dynamic of the franchise is constantly changing. Is something that's actually very good for EA. We'll talk about that in a second, I'm sure.
So before we jump into Electronic Arts, or EA as they call themselves, but I will always think of them as Electronic Arts. I don't even know what the official name is anymore. Let's talk about the first of the month. We just passed the first of the month. I'm not even sure what day it is. It's the 6th of the month, I think. On the first of the month, we release our new stock picks. And what does that mean? That means that if you're a member of 7 Investing, you get an email or you can go into our site and it tells you, wow, here are the new picks. And each one of us picks our highest conviction stock for that month. And then we produce a write-up on it. I know my write-up topped 3,000 words. Not that amount of words is what's important, but there's a lot to it. And we also shoot a video. I just finished editing the transcript for my video, so you can actually watch the video or you can read the video. It gives you as much as you want or as little as you want about our picks. How do you get access to this? It's very simple. You sign up at 7investing.com/subscribe, and you can pay us either $49 a month or, and this is the deal, $399 per year. It's easy. You get invited to members-only calls. You get all sorts of proprietary data. There are people asking us, oh, what about this company? What about that company? A lot of those companies that you're asking about are covered in subscriber-only updates. There is just an unbelievable amount of information for the value. Simon, I'll give you the last word since you are the CEO and founder of the company.
Oh man, what a great group of picks this month, Dan. I mean, if you look at the chart right there that you're showing, I really like your and Matt's companies that you recommended. Big fans of both those. Some of these are really off the radar of a lot of investors, right? You see that very high risk pick from Max Biotechnology. I would even argue that Anirban's pick this month is really off the radar, even though it's a large cap. I think it's one that a lot of people hadn't heard of. And even my recommendation this month, very high risk in the space economy. That has got a huge potential, but also a lot of risks involved. I'm pretty stoked, Dan. I think we came up with some pretty awesome companies this month, and looking forward to seeing how they do in the next couple of years.
Yeah, I'm very excited. And I'm very excited about the process. Like I talk a lot about in my video how it was conversations with Matt that led me to really look into the company. And it's one of the advantages the seven of us have of just interacting, is that sometimes things pop up on our radar because of how much we talk and how sort of supportive and non-competitive we are. Like, we'll throw out, hey, what about this company? And it's like, oh, wait a minute, I looked into this and this isn't even my space, but I have all this backup from, say, Matt or Max or whoever. It's really exciting, and we hope you become a member. But before we run out of time, we would, of course, love your questions and comments as we move along. But let's hit the ground running with Electronic Arts. EA reported fiscal first quarter net income of $204 million or 71 cents a share. That's down quite a bit. That $365 million at $1.25 in the year ago period. Revenue was up slightly, 1.55 billion from 1.46 billion in the year ago quarter, and bookings, which account for deferred revenue, were up 3% to 6.4 billion over the trailing 12 months. Matt, were these good numbers? I can never tell. Like, it's always a little bit tricky to compare these.
They were good numbers. Like, the earnings was down because they had a one-time benefit last year, a tax benefit last year. There was an extra week in last year's quarter. So there was things like that that made the comparables a little tricky. But like, it was good numbers, and more importantly was its guidance. I am an EA shareholder. I was very excited about its guidance. EA has been steadily giving money back to shareholders, repurchased 2.3 million shares this quarter. The last 12 months, it's repurchased 7.2 million shares, and it started a dividend. So now it's paying a dividend. So it's an income stock. But no, I was very excited about the numbers. I thought they were very good, especially its guidance.
So EA is a little bit different than Activision Blizzard because they have all of the major sports franchises. Doesn't mean other people can't outbid them, but those tend to be 10-year contracts. They don't all come out every year. Like, UFC only comes out every couple of years. But for the most part, these are new games every year. Matt, let me dial this back to the question you just talked about, where games are going to move into what you called a liquid world, where they're just constantly going to be updated. Can I expect at some point that I'm going to buy Madden on like a subscription basis? Or I actually get EA Sports games, a lot of them, on my Xbox subscription. Is there some point where I'm just going to own FIFA Soccer and the rosters are going to update as the seasons and the changes are going to come? Is this model about to change?
It very well could. So what they do is, like, they have like a lot of ways they monetize these leagues. And FIFA is actually its biggest one, even though I'm much more familiar with Madden. Like, FIFA is its biggest one, and the way it does it is like, so it has the FIFA game, like FIFA 2020 comes out, and everybody rushes out to buy the latest version of the game. But then there's also the FIFA mobile game. There's also the FIFA online game, which is really big in Asian markets, which is like a lot of it is free to play against online players. And then you also have like the FIFA Ultimate Teams. So like people subscribe to like the Ultimate Teams, and what that means is, like, you can customize your own teams. You can get past players. So like, for instance, like going back to Madden, you can do the same thing for Madden or their NHL games too. But like, I'm a Miami Dolphins fan, so if I want Dan Marino on my Miami Dolphins Ultimate Team, I can have Dan Marino on my Ultimate Team. And so it's the same with FIFA players. If your favorite player just retired, you can go to your Ultimate Team, customize it, and get your favorite player back. And so that's like really, really popular with these sports gamers.
And Matt, just for all of our viewers around the world, so they don't get mad at us, it is actually FIFA.
I was wondering myself, Dan. I wondered if I've been mispronouncing it all these years.
Yeah, no. Again, just so my brother, when he watches this show, doesn't angrily, I've mentioned before, my brother's an executive in the Premier League with Tottenham. So come on, you Spurs. And
it's all Madden. It's all football. I don't know. Soccer game.
Hey, look, NHL 2021 for me as well. Simon, your thoughts here. Do you think the franchise strategy here, do you view it any differently than the way you viewed it with Activision Blizzard? Because obviously sports is sort of ever renewing with draft picks and the like.
Yeah, I completely agree. I think it is very different because of the competitive nature of live sports. It translates directly to FIFA World Cup and Madden NFL and all the games that EA has got such a lock on and those contracts on. Right, so FIFA's got, what is it? Volta coins is the currency that they use for that, where you can upgrade your players, you can add skins, you can add new characters. Like, they've created a currency within this entire game, and that's feeding those 2/3 of revenue that Matt described as the live services with at the top line for EA's revenue contribution. And I mean, you just see the impact of something like that. It's huge. And I think that a company like that, that's got the lock for these sports franchises, benefits from that tremendously.
And Simon, EA is not alone in this, but these companies very broadly have been really smart about increasing revenue opportunities, right? With like, all the different add-ons and things we talked about, but even just like tournaments and additions to games and sort of new ways. I mean, I know my son comes to me like twice a month with like, can I buy this pack? And if I spend 17, I get all the packs forever, but I could just buy this one for 5. Like they're pretty innovative.
Teams change every year, right, Dan? I mean, who would have said 10 years ago the Milwaukee Bucks were going to win the NBA championship, right? And now Take-Two's got the NBA 2K franchise, which is incredibly popular in Asia too. And players change teams and teams get good. And then you want to cheer for your home team and everything else. I think that this is a natural fit, in my opinion, for live sports.
Yeah, I think the issues we have with franchises don't really apply here, because you could argue that putting out a new Call of Duty every year is going to burn the audience out, or even if you just have one that's ever present and growing, that at some point you're just going to bore of it. Whereas, as an adult, as a 47-year-old man, I can't say I buy the new NHL every year. Again, not relevant because it's in my Xbox subscription now. But previously, I might wait a year or two and buy it for $30 instead of $60. But I do think the core hardcore audience is going to want the new game every year. Matt, let's talk a little bit about mobile. EA games you don't think of as being mobile, but I actually think I'm wrong there.
Well, actually, you weren't wrong until very recently. Like just even like a year and a half ago, their mobile division was sorely lacking. But I will say they have reorganized their mobile gaming division, and they've been very active in this space. They've made 4 acquisitions just this year alone. Well, one of those is still pending, but they acquired Metalhead, which is the maker of Super Mega Baseball. They acquired Codemasters for $1.2 billion. They're the maker of the popular Formula One mobile game, and also Dirt Rally. They acquired Glue Mobile for $2.1 billion. They make games like Covet Fashion, Design Home, and MLB Tap Baseball. And it's still pending, but they're trying to acquire Playdemic from Warner Media for $1.4 billion. They make a game called Golf Clash, which has more than 80 million downloads to date. And, not only are they acquiring valuable mobile IP, but they're also like acquiring a lot of talent. So like, for instance, in the Glue Mobile acquisition they made, they added 500 mobile game developers, to their payroll. And that's significant. Hiring that many mobile game developers would be quite an undertaking. So just acquiring a company like that and adding these mobile game developers to your payroll, it goes a long way.
Yeah, and buying your way to a new market is not generally a negative. I'm going to assume Super Mega Baseball is just like Barry Bonds against Roger Clemens, but I might be totally wrong in where they're going. Matt, we're going to take some questions here. We're going to take Max Lucas's question here in a second, but is this an area where EA can afford to have failures? I would assume in the mobile space, you're probably throwing a lot at the wall, right, to see what sticks, because in general, these are not $100 million or $200 million game developments when you're talking mobile games.
Well, that's one of the advantages of like acquiring the companies. Its acquisition strategy is like these are known hits. They're known IP. They already have audiences. And like another thing, like making your Madden franchises, your FIFA franchises mobile, like you have a dedicated player base for those games too. But yes, of course they can afford a few misses here and there.
Yeah, I mean, here's the thing. In the mobile space, there are a lot of misses. I would argue that Apple's entire gaming strategy has been misses, though I've been paying them whatever it is a month to never, ever enjoy any of their games. But of course, I also am someone who plays live backgammon and live solitaire online. So perhaps I am not the core target audience. Max Lucas says, I asked Dan this on Twitter. If you want to bring that up, JT, that would be great. But will these video game companies start to add NFTs? Like you could buy a skin for $5, but if you want the limited edition 1 in 10,000 skin with the NFT costs $1,000? I think this is a really interesting question. Simon, this is kind of in your wheelhouse.
Yeah, there's going to be a marketplace for this. I don't think it's going to be the revenue. I don't think it's going to move the line or move the bar quite like the game sales or the in-game purchases are. Max, I mean, like you're going to see a marketplace for the skins that are, the 1/10,000th anniversary or the really super exclusive one that'll sell for $1 zillion that everybody's really jealous of the person who got to buy that. I think that's more of going to be a sign of the times of just kind of seeing NFTs become more popular in gaming and in music and everything else where we're seeing them. I don't know if that's going to have a huge impact on the game makers' revenue, but maybe that's wrong too. Maybe it actually is, and there's going to be a huge marketplace for these.
I think we're seeing a lot of experimentation. Like we've talked about concerts being done live in Roblox. I want to say it's Ariana Grande, clearly not my target demo, that's doing something live in Fortnite. You might see admission-based events and just sort of, and that's going to tie into what we talked about with virtual reality on other shows where, as these gaming platforms change, and that's the interesting thing about a Madden or a Call of Duty or any of these franchises. It's pretty likely that if someone develops a successful virtual reality gaming headset, which nobody really has so far, that any of these popular games are eventually going to port over. And I think we see both of these companies, EA and Activision, being smart enough to take advantage of that. We saw in the 80s and 90s, some of the successful game makers didn't jump to the right platforms fast enough, and that has been a problem. And whether you're going to be on Switch and whether you're going to develop a PC game, there's a lot of expense and choices to be made here, but I do think owning franchises is well positioned. Matt, I'll give you the last word before we seg into talking about Intel, AMD, and the fight for the future of AI. Well, that sounds like a movie I'm not going to watch, but Matt, your thoughts here.
Well, like the only thing I would say about EA, I mean, we were talking about like whether you need new franchises or not, but like it has been very successful with its Apex series. Like it's on season 9 now. Like video games have seasons, talking about like Liquid Worlds, but it has 13 million weekly active players. And it broke a new record for peak daily players across all seasons this last quarter. And the 3 latest quote unquote in-game events have driven the highest player counts for events to date for the game. And it's expanding now beyond to like a battle royale mode. So it has arenas, which brings in new and lapsed players into the games. And so that was in response to Fortnite a year or two ago. And it's been very successful with that. And it's an example of like introducing a new game that's been very, very popular.
So Nick asks, what could be causing Nintendo's negative sentiment? And I don't follow Nintendo on a day-to-day basis, but here's what I'll say about them. They're incredibly well positioned for NFTs. Your ability to have like a Pikachu, something that somebody pays $100,000 for, or a special Mario, whatever, they have characters that are beloved. But I also think Nintendo's a much slower cycle than the rest of these companies. They really hit it out of the park with the Switch. They released the cheaper version of the Switch this year, and it's by all accounts been very successful. But there's always a question of whether they're going to be able to top that. I mean, they almost put themselves in real serious trouble with the Wii U, which didn't work in terms of connecting with consumers. But I do think there's something people are missing with Nintendo, is that's the massive impact they're going to have from Super Nintendo World when it opens first in Japan, then in Florida, then on the West Coast. This is going to take these IPs and bring them to this massive theme park scale. Matt, you wanted to weigh in here.
Yeah, well, just a few things. Like they're so dedicated to having their own hardware for their games. Like think about how popular that Pokemon Go game was a few years ago, where everybody had their cell phones out hunting Pokemon, like it seemed like everywhere, like in parks and on the streets and whatever. And like that was like that intellectual property it has is so popular, but they're so dedicated to only putting it on its own platforms. I think my biggest concern with Nintendo would be, if I was a shareholder, was like I would want them to open that up, start being more hardware agnostic. Yes, still come out with the Switches, still come out with your consoles and everything like that. But release some mobile games. I mean, they have so much great property. Imagine more mobile Mario games and more mobile like Zelda games and things like that. They have a lot of great property, and I just wish they would release it more. People are on mobile now. You don't carry your Switch or Nintendo console with you necessarily.
They have put a toe into mobile. There is a mobile Mario Kart, but I agree. I actually think it's long been a mistake that they don't, have their devices, because families are always going to want the Nintendo safe world where even games like Mortal Kombat, to port them to Switch, it's not as violent as when you play it. And my kid's 17, so I don't think about this as much, but it was something we were very conscious of. And we had a Switch from very early on. But I want to see the next Super Mario Kart game be available on Xbox, be available on PlayStation. I don't think there'd be any resistance to that. And there's just a massive audience there. And yeah, it might cost them some low margin hardware sales, but it's just not that important if they sell 22 million Switches or 20 million Switches. Like that's not that relevant. But we are running out of time here, and we pushed this topic off once before. So I don't want to have it be our, coming up next, Matt Damon, oh, we ran out of time. We don't want to do that. So Simon, this is one you brought to our attention. So there's a battle going on between Intel, AMD AMD in the artificial intelligence world. But basically, AMD is trouncing Intel, and Intel is in the midst of a turnaround. Why don't you set the table a little bit for where we're going to go with this, and then we are happy to get into the discussion.
Well, the foundation of the table is actually a statistic that Matt brought up fairly recently, which was showing Amazon Web Services growth of 37% year over year. Right. So this is the largest cloud computing infrastructure provider out there. We're building software as a service. We're offering infrastructure as a service, platform as a service. Everything is being built on the cloud right now. Nobody's doing it on the corporate data center. And when you see a number that large for the largest player in the space, you start having to think to yourself, okay, well, how is Amazon going to keep up with that demand? How are they going to have the servers that are going to keep up with the machine learning that everybody's asking for all this cloud-based processing that's taking place out there? And it's turned me to look at the chip makers. These are the companies that are producing the processors that are going into the servers that are powering those cloud data centers. And I've compared them, and it's pretty striking that we've got some winners and some potential losers in this race, Dan. And that's what I kind of wanted to chat about here on the show here today.
Yeah, so right now AMD has a big lead, but I think you can argue that there's room for more than one. It's probably not great for AMD to own this market. Can Intel make a comeback, and sort of what moves have they made? Because they're actually losing sales, and that's not great in a growing market.
Yeah, we looked at, we just saw quarterly earnings from all the big chip makers, and I wanted to highlight a couple of important key points from this. The first was that AMD's enterprise, embedded, and semi-custom group, so the really high performance chips that they're making, grew 183% year over year. That's fantastic for a company that's got over $100 billion market capitalization. You also look at NVIDIA. We know that NVIDIA has really focused on the data center too. NVIDIA's data center sales are up more than 79% to $2 billion in the last quarter. So this is really, really fantastic, right? You're seeing these custom chip makers getting a ton of revenue from the cloud data center. But then I look at Intel, who reports that their own data center sales fell by 10% year over year. And I think that a lot of this has to do with Intel wanting to have so much of the manufacturing and the production of those chips coming from its own fabs, where it's had some missteps in recent years, Dan. It hasn't kept up with AMD and NVIDIA, who are strictly designers of those chips, who are then sending the designs off to Taiwan Semiconductor to actually do the manufacturing of them. That's allowed them to get much smaller transistors on those chips and much higher performance chips. And it's winning them a lot of really good contracts, not only with the cloud providers, but a small fruit company from Cupertino that wants them for really, really high performance smartphones.
So let's talk about why this is more relevant now. We teased AI in the beginning, but artificial intelligence is going to exponentially increase our computing needs. So is this a case where AMD is just going to own that, and maybe Intel has to spin into other areas? Or, can Intel... And look, I think we don't want all of our chips being made by Taiwan Semiconductor. That seems to be a problem. But can you equal that innovation? Obviously, Apple has been able to do it with some of its own innovation. But do we think that AI can lead to more companies winning? And will Intel be one of them, or is it someone we're not talking about?
There's going to be a lot of computing demand in the next couple of years. We always talk about AI. We talk about the highest performance, the best of the best. Are we at 7 nanometers? Are we at 5 nanometers? Are we going to get down to 1 nanometer? I mean, we keep kind of pushing the bar. Everyone says Moore's law is dead. It's really not. I mean, you see CPUs that are getting smaller and smaller transistors for the processors that are doing all this computing out there. And that's what we talk about, but we forget that there's a ton of other industries that are going to need a lot of computing too, right? We talk about the Internet of Things. Wearable devices are very, very small form factor that's going to need a lot of computing that's taking place there. The automotive industry is in a severe shortage right now. The chips that are going into self-driving cars or the consoles of entertainment systems of cars, they can't even get supply right now because they're so backed up on things like this.
Yeah,
and
we're
Intel. Yeah, and Intel has addressed a lot of this, because even if they are not at the cutting edge of the most innovative chips that are out there, Dan, they know that they're going to have to expand their own capacity. You see them putting $30 billion to expanding their own fabs in the United States. They want to go out and buy global foundries for another $30 billion. There's a huge demand out there. It's just, can you keep up with it?
Yeah, I did not know until the chip shortage that like our televisions use chips. And we're actually probably going to see a Black Friday season where you don't get those crazy, like I think I bought a 65-inch television last year for like $280. You may not see that this year simply because there's a lack of availability. So is this an area where, well, one, let's talk about the history. 5 years ago, AMD was maybe not even Pepsi to Coke. They were like Virgin Cola to Coke. Like they were way down. So there is a path and a history that shows a turnaround is possible. But for Intel, do you like their management? Are you confident that even if it is going after all of these lower end uses, that they can stay? They do have the name recognition. We still think the little noise and Intel inside. Can they sort of become a stronger player? Because they have changed some management up. Are you confident that they're going to get there?
They're the horse that's behind in this race right now, Dan. I mean, if you look at AMD, like you mentioned, 10 years ago, or even 7 or 8 years ago, they were kind of a second supplier, right? Laptops were really big, desktops were really big. And then Intel kind of missed the opportunity to get into smartphones. And then they kind of missed the opportunity to get into cloud computing with the data center. And I think that because they wanted to keep the manufacturing in-house and they haven't kept up with their competitors, this puts them at a disadvantage right now in a really crucial time. Now, the interesting trump card on this is that they're bringing back one of their most highly regarded executives. Pat Gelsinger has just come back as CEO of Intel. He worked with Gordon Moore, back in the 70s when Moore's Law was just kind of getting, its feet on the ground. And so for him to say something like this, it really is a statement, because he's a very innovative guy, really a fan of disruptive innovation and all of these things that we've grown to love about computing. Maybe that reinvigorates Intel, but I will say it's not like you can just snap your fingers and all of a sudden become number one horse in this race. The race for AI is a very lucrative, very addressable market. It's going to be hard to fight this one, and Intel is coming from a position of disadvantage right now.
We've seen a lot of tech companies do this. There were points where Microsoft and Apple were similarly on the ropes and managed to turn it around. On the other hand, there's IBM, which has been trying to turn things around for a very long time. And while they've had some successes, they are certainly not the company they once were. This is an area we are going to talk about quite a bit. I think AI, if we had to list like 5 topics that are going to come up, the Internet of Things, AI, space would be 3 of those 5. So this is something we're going to come back to. As we close out the show a little bit here, wanted to take a question we got from one of our fans. If you want to bring up Eduardo's comment, JT, I'm hoping you have it. If not, I can read it here. It's he says, "Hi, Steve." That's our very own Steve Symington. "Very nice addition to your services. Do you also support in investing in bonds or U.S. or corporate for older investors? If it is secure for investment, if not, what would you recommend?" I have some thoughts here, Simon, but why don't you, as the person who set the agenda for this company, why don't you answer the broad part, and then I can weigh in, and so can Matt.
Yeah, sure. Great question, Eduardo. It's obviously a personalized one, right? We don't give financial advice. We don't give personalized retirement advice. We don't really talk about bonds because we kind of know that the lane that we run in is the equities. But of course, there's nothing wrong with it. I mean, people have different situations. You might want the income. You might want the stability. But I don't feel like I'm really qualified to answer this one. It's too personalized of a question for me, Dan.
In a broad sense, he mentioned older investors, and I will say that some of our picks have been very steady dividend-paying stocks. And again, we can't speak to your personal situation, but for an older investor, part of your portfolio could likely be less volatile stocks. Again, you know your horizon. One person's 70-year-old is very different from another person's 70-year-old. Matt, do you want to weigh in a little bit here?
Yeah, so not personal advice at all. I think the problem like bond investors will have though going forward is that like they've enjoyed this massive tailwind from lowering of interest rates for the last 30, 40 years, really. I mean, they've bounced up and down a little in that time, but overall that trend has been steadily downward since the early 80s. And that's been a huge boon for bond prices. And now we're at zero. So where do they go from here? So like right now you have new bonds have extremely low yields, and like existing bonds, like can their prices go any more up from lowering of interest rates? Can interest rates go negative? Yeah, I guess they can, but like I don't know if I'd be wanting to like base like my thesis on that. So I just think it's gonna be hard for bonds to have tailwinds from here. But like what you should do as far as allocation in your own portfolio, definitely consult a financial advisor.
We focus on what we do well, and that is picking individual stocks. But certainly there is a lot of room for diversity in types of investors in the stocks we pick. Simon, you had one more comment you wanted to make before we hit our finisher here.
Well, yeah, we were talking about NFTs earlier, Dan. I wanted to ask if I created an NFT with a digital backgammon set that had the 7 Investing logo on it, how much would you pay for one of those on the marketplace?
It's funny because I don't think, if you created a physical one, I think I'd buy it. But because for me, and this is going to sound strange, there are absolutely digital collectibles I would want. I mentioned Pikachu earlier. I played Pokemon Go. I like some of the Pokemon. Maybe I would buy, a goofy something there, not for thousands of dollars, but in terms of a backgammon set, I like taking my backgammon set and going to play in a coffee shop. And absolutely would I consider buying a collectible or displaying it the way someone might buy like a Simpsons chess set or whatever it might be. Again, I'm not a huge collectibles person. I have some Lego miniatures and a few NFL things from my brother, but for the most part, but there are NFTs I would buy. Matt, I don't think you're a backgammon player, but would you buy whatever game it is you play, the 7 Investing edition?
Like a real life version? Yeah, I'm much more likely to buy a real life version than an NFT. Like I still don't, I don't really understand that whole thing.
We can make a chess set. We can have each of us be characters on the chess set, maybe.
Yeah, I'd have to be a pawn, so I'm going to pass on that. I just picked that completely randomly, and I'm going to say
I think Max would be the pawn. So.
As someone who is in the toy business, I'm going to say no to 7 Investing-opoly, because literally every day I'd have salesmen selling me like 300 different versions of Opoly. There is a great Simpsons joke about all of the different Opolis they have. Ravi Shah says, is Dan still watching Pokemon? I do. I've never really watched Pokemon, aside from when my son had a phase where he really liked the cartoon when he was much younger. But I played Pokemon Go. I was like the last guy. Like I played it very diehard. It's a lot of fun. I spent an embarrassing amount of money on Pokemon Go. It was a great distraction. I liked that there was a social aspect to it. Bars would have like Pokemon Go get-togethers, but we are totally losing track here. So before we completely get off topic, JT, let us hit our finisher. Do you think we're at the end of a boom period for technology stocks? 10.4% said yes. 56.1% said no, and 33.6% said depends on the company. So I'm going to go a little contrarian here. I'm going to say yes, but I don't mean that stocks that have boomed are going to crash. I mean that we had a very distinct period that was created somewhat before the pandemic and somewhat by the pandemic that led to a cultural change for things like telemedicine and video conferencing. And I think that distinct period is over. And I don't mean, again, we're not going to stop Zooming, but this catalyst that got all these people to a lot of these tech companies, that has happened. And now we're going to see how they're going to grow and how they're going to pivot. We talked a lot about Slack, which is now owned by Salesforce, and they're integrating, I think it's actually JT Street, who's producing for us today, who said, hey, they integrated poker. We should play poker on Slack. Well, if poker catches on for Slack, that could actually be a revenue driver or an engagement driver. So I don't think we're looking at some post 90s doom and gloom period for tech stocks. It was Zoom and not Slack that has done that. I don't think we're in some post 90s doom and gloom period, because that crash happened because the cost of doing things online did not match the revenues. That is not what we have here. I just think we're going to see how clever companies can be, because there was a period where it was like, well, what am I going to do for streaming? I don't know, anything. Like I'm watching 9 hours of Curiosity stream because I've already watched everything on the 75 other services I have. Sorry to talk so long. Simon, you're smiling, so why don't you weigh in here?
No, it's definitely a combination in my mind of either no or depends on the company. I mean, like we did see last year a spike in web traffic, right? Because COVID, and we all know about that. And so there's so many of these companies are their revenues derived from usage-based models. When usage shoots up through the roof, people get really excited. Valuations follow suit too. It'll be interesting to see which of those sustain and which of those kind of revert back to the mean. In my mind, though, digital transformation is still in first or second inning. There's some really long-term developing trends that we should be paying attention to.
It is very important to look at management because there are going to be a handful of tech companies, and they're probably not tech companies we talk about a lot, that simply benefited. I talk about this a lot with Kroger. Kroger benefited because they were a grocery store at a time we needed groceries. How they pivot to competing with Amazon and Walmart is going to matter. There are some tech companies. I mean, I've joked about it with Brawny paper towel. When you couldn't get paper towels, everybody bought whatever paper towels was available. I think that was true with technology during some of this. So I would really look to, are these companies leaders? Are these companies best in class? Do they have management? Or did they sell you something when no one else could sell it to you? And that could be an entry. That could be, wow, I just discovered that Brawny paper towels are just as good as Bounty and they're cheaper. But a lot of times that is a false high. Matt, I'll give you the last word here.
No, I don't think it's at the end. I would say multiples are definitely higher, and I would not expect the same returns we've seen in the last 2 or 3 years. But like Simon said, I mean, digital transformation is still at the very beginning of that trend, or at least early to mid innings. Let's call it that. Early to mid innings. We got a long way to go. But I would not expect the same returns we've seen in the last couple of years.
For those of you who are not baseball fans, there are 9 innings in a baseball game. I feel like I have to explain this because baseball has fallen so far. No, I'm kidding a little bit. I would expect people to at least know that part of it. So earlier, a few minutes ago, we took a question from one of our members. We did that live on the show because we thought it would benefit a lot of people. But a lot of times we're getting questions from members and we're answering in our members only call. We are answering sometimes directly to that member. So if you are a member and you email us at info@7investing.com, sometimes we'll use it on this show. Sometimes we'll use it in a member's call. Sometimes, of course, we'll just answer your question. If you're not a member, of course, you can email us at info@7investing, questions about our service, questions about how you join, that type of thing. If you'd like to interact with us, and so many of you interact with us, and that is a lot of fun, that is at 7investing on Twitter. If you'd like to tag me, and I'll only speak for me, in posts you think I'd be interested in, feel free to do that. I've made friends from that. I have a couple of guests coming up on the show in the next couple of weeks that are just people I've met over social media, over Twitter. We are easy to get a hold of. We are fun to interact with. We appreciate JT Street stepping in for Sam Bailey. Sam will be back on Monday, I believe. But this has been an exciting show. It took a lot of prep this morning, so I'm very excited at how it came together. I thank all of you for watching. We will be back on Monday. For Simon Erickson, for Matt Cochrane, for JT Street, for Sam Bailey, who helped behind the scenes before the show, thank you all, and we'll see you on Monday.